Welcome to Trading Lounge and the Australian report for Friday, September the 16th. And yeah, look, as you know, we're basically looking for a move down. It is possible that this move down here is a wave as an A and a B and a C wave here, and then up for the C of B here and then down at that point, or we could just come down to these lows here, this level at 6,500, have a bounce after 5 waves and then come down again after that. So I won't know that until we get there, and how long the third wave is and a few other little things, and see how the US market is. And so I'll just have to sort of work that out on the hop, but our direction to the downside is good. At this point, the stochastics here are giving us that crossover look there. Yeah, and we're sort of breaking lower here. Like in the US, we didn't rally as much as I wanted to for a little wave 2 in here, but we've got wave 1, possible wave 2's in play. We need to talk about that today, and then 3, 4, 5. So look, the trick today really is about, if Friday is going to be bearish, then Monday and Tuesday will follow through. If Friday is going to be bullish, then we haven't seen that. We haven't seen the completion of a rally yet. So let's just check on that here at the moment. So I was thinking that the rally could go higher, but as in the US as well, it's just been really quite small. And it's probably a good idea to watch the US video, but if you haven't watched it, in a bit of a nutshell here, is that we need to look at this here as an ABC here for wave 2, so wave 1 and 2, and then the market just rolling over here. But I've got to count that, if I can just bring up the SPY here. So this looks all sort of bearish here, but what I wanted to say here is that this last leg here, 1, 2, 3, 4, 5 here, that could be the low here, and we could go up from there. Well, I expect to go up anyway to, you know, have a corrective rally here to a point, and then come down again. But it could, from this point, continue all the way up here. So all of this becomes an A, B, and C pattern here. And I've just used the SPY, the EFT here, just to look at it as 1 and 2 and 1 and 2 and 3 and ABC for 4 here, down 5 waves down for 5 for 3, and ABC for the A wave, an A and a B and a C for the B wave, and up for the C wave to make wave 4, so wave 3 to wave 4, and then coming down here. So we'd still need one more little low to come in here, because it looks like it's 1, 2, 3, 4, 5 here. So the market could have one more low here and then move up in terms of an A wave, a B wave, and a C wave here. So, but if Friday just continues to be bearish, then we can just eliminate this. But I have to look at the other side of the market. Good to watch the US video, so you'll know exactly what point and what to do, when and how, and so on. But just in a brief nutshell, that's how that's playing out. So with this market, we could do the same as well. We could look at this as an ABC pattern, and we still need to come over here for a wave 2. But otherwise, just shorting new lows is the way to go. We'll look at the 1 hour chart where we took off from yesterday. This is what we talked about yesterday. So we're far from coming from our wave 2 over here. So it's possible that this wave 2 could come in over here for that. Okay, I'm just going to clean a lot of this mess up here. I was just talking about, you know, just looking at it and how it would roll over and all the rest of it. So I'll just remove this now. Don't need that. But we would be looking at this as currently as an ABC here. I think there's a better fit with putting it here as an ABC pattern here, but we can debate that later on. But otherwise, just edging lower through here. We talked about places to add down here. You might want to hit it a little bit more. If Friday's going to be like bearish, like I said, then do that. One way you could do it is look at the S&P 500 here, and what we could do is it's pretty much, we've got 1, 2, 3, 4, 5 down here at the moment. So what we can do is we can use that 3080 here, and if that becomes the retested resistance, it can come down and bounce off it, and it could go through it a bit. So it would come down bounce off it, come down and have a low below it, and then go up from that point. But leaving that exposed would, there'll be a bounce around here anyway, and then breaking down through that with a bit of a classic trading levels pattern, then we can come down, then we'll be coming down further. And that way, you know, Friday's going to be bearish. That means Monday's going to be bearish, Tuesday's going to be bearish, and all you need to do is somehow stay with the trend. And you can do that by not over trading, of course. If Friday turns out to be bullish, then we're going to be heading back up into that wave 2 situation here, as I just mentioned. But otherwise this can just continue to roll over, but we need to have a look at how we can count this up here as well. So from the 1 hour, we'll look at the 100. See, because this little move here seems to play out as 3 waves here, I think it's best if I put wave 1 here, and then that would look at this being the A wave here. If I can, I mean, you might have a different count, and I'm not saying this is right or wrong or anything. I'm just saying it's the best fit that I can see at the moment with this wave 3 here. An A wave, an ABC for the B wave, and up for the C wave to make wave 4, then 1, 2, 3, 4, 5 here to make the 5th wave here. Then I've got 3 waves here, because I can't put that as a C wave over here from over here somewhere. It just doesn't sort of fit somewhere, doesn't fit very well at that point. The good news here is that this large number here that had been supporting the market is now becoming the resistance here. So what I'm sort of thinking, if I just take this down here, and this will be the 6780, which would be important, if that becomes the retested resistance, because now we're talking about group 2 in here, so 6765 there, that's part of group 2, and the 772. So 72 is important, but when you get 772 or 272, it seems to carry more weight for some particular reason. So if that becomes the retested resistance here, then you know that you're going down as well, because well, when we talk about a large number like this is a minor level here, then we look at group 1, which is 10, 20, and 30 here, and this is just the natural swing range for the market at the 6-8. If this becomes the retested resistance here, this number here, or the 72, then you know that the market's going to leave the closest largest number and then work lower at that point. So that's how you know that you're in a bear market at that point. Because all of this here, this is going to be, this area, this group 2 is the support for this number. So, you know, it could play out and then go up from there. So anyway, that's that. I won't harp on about it too much. I want to have a look at the bullish count where we could put wave 2 here over in this area over here for that. So I'm just set something up on the 50 tick chart here just to give us a bit more definition of this move down here. So a little bit different. So in this case here, we've got a nice 1, 2, 3, 4, 5 here. So I can assume that this would be 1 and 2 and 3 here, and then probably a WXY or something for wave 4, and then we're coming down for wave 5 here. So what we could do here is that you know, then have the ABC pattern here. So this is why it's just a little bit, that's why we need group 2 here to become the resistance. And the other thing too is that in terms of stops, if we just take the top and the bottom here and look at the 61.8%, then you'd need to have your stop above here. So if you haven't overtraded, you should be able to, you know, take up that point there, you know. I mean, I know it's tricky just to trade, you know, you might normally trade 5 CFDs or, I mean, even 3 CFDs, you know, so you just have to have 1 CFD on the short side in here. And then when that group 2 here becomes the resistance, then you can add another short CFD at that point, you know. I know having 1 is boring as batshit, but it gets you to where you need to get to, you know. So anyway, that's what it is at this point. Okay, so over to CBA here. So with CBA, we were looking for a bit of a rally yesterday as well, in line with the banks, and a fair bit of volume came in on that too. So yeah, I mean, that could be quite supportive at 95. It's all about the 95. So if you wanted to short this here, then you can short it under the, if you wanted to short it again, you can short it under this current low here, if you wanted to add to the position, so to speak. Because this move in here appears to be corrective as an A and a B and a C up here. So it seems to be, if that's corrective, then we should be making a new low below here. Now the 95 is the support. It's also the 50-60% retracement level in here. So it's going to be, you know, it's going to be a tough battle, but the bears should win in the end. Yeah, because of that being corrective, and we can look at this as being an impulse wave. So we should be lower on that, and that will be the same for other banks as well. Coming over to the iron ore sector here, we've seen a move down through here. I just don't know if we're finished here with this. I think that they could be, maybe not, but that's definitely wave 1 and 2 here, then 1, 2, 3, 4, 5. I think this is a little fourth wave to pull back and then a move up, but because it moved down here, then we're going to see that weakness. We're not going to see a lot of weakness in the iron ore in the iron ore business, because we haven't seen the US dollar push up just yet, but I think it will. So a bit more fluffing around here, and then we should see this move down. So what does that mean for these markets? So yesterday we figured that BHP would have a little bit of a move up. It was on a lot of volume here, but obviously it's been sold off as well. So the sellers are in control of the market. Still a few buyers in there. So that should drop lower from here. We should see that move lower here, but yeah, bit of a high risk situation. You're just using the 40 here as the resistance at this point, so it's a bit you know, also to remember too that we could count this up in 5 waves. I mean, we can look at it as an ABC for the A wave here, the B wave here, and the C wave here, to give a bit of equality between A and C, or otherwise 1, 2, 3, 4, 5, and coming down here is an A and a B and a C. It hasn't broken out the low here just yet, so it's possible that it's still quite bullish at this point, but I don't think so. And this market, RIO here as well, it didn't really take out the top over here, so we'll just leave this at the moment. The same thing occurred here. There's selling going on with this, and we should see a smaller, weaker bar here today, but don't expect any ranges to occur. Do you know what I mean? Don't expect, I mean, it could happen, but I'm thinking about another bar about the same size but slightly lower. But yeah, nothing to write home about. And FMG's sort of same. We can also look to, we talked about being short under here yesterday. We could bring that up under this low here if you wanted to do that. So we're just sort of working it to the downside, basically expecting a bear market after that rally. The gold market, the GDX here, the ETF, we're looking at this as 1 and 2 and 1 and 2, and then it finally broke because I could see that was corrective and it was coming down too low. So all on the right track there as well. Stochastics clicking over. There will be support at these lows here, but you know, we should see further downside to come. It should come down and bounce off the 23, which is the top of minor group 1 of major trading level 2 here. So yeah, still edging low. We're also seeing US spot gold break lower as well. Yesterday we'd been looking at this here as 1 and 2 and possible 3, 4, but better still as 1 and 2. So 1 and 2 and 1 and 2, which is kind of playing out quite nicely because of the speed which this is coming down. Now the 16 excuse me, the 1650, I don't smoke by the way, but 1650 down here should give us some sort of support here. for this, but we should see it moving lower and probably down to 16 or down further. So I always say that's, yeah, anyway, that's that, and I won't rub it on too much. Newcrest mining sort of held there for a little bit. That's going to drop again. If you wanted to add to that, that's fine. There'll be support here for that, but there's still further to move down. I mean, this could be 1, 2, 3, 4 and 5 to this point. Markets in commodities can extend in the fifth wave, but I'm thinking we'll go with GDX as 1 and 2 here. Nice simple ABC pattern here, hit the 50% rather than 40%, you know, so I think that we're on the right track here with this. So I'll leave that up to you. I mean, you've got a fair bit of exposure here at the moment with all of that anyway. If that gap, you know, if you got filled on the gap here, you'd just be sort of at break even at the moment with that. US dollar. Just before we go to the US dollar though, I want to go to Lithium Stocks because I missed them yesterday. And if I forget the bonds here, we've got 1, 2, 3, 4, 5 here. So I'm thinking that we're going to have little wave 1 and 2 here again, and then 3, 4, 5 heading up there high for that. But I'll just come back to that in due course. Want to have a look at our lithium stocks. So what I've been trying to do, I've got 2 sets. This is set 1 here where we've got the nice 1, 2, 3, 4, 5 here, and we're looking for the ABC to come back here. So we don't know if we've got a wave 2. There's still a lot of work to do here. You know, we just didn't go long in this one here. So this was this kind of tighter range 5 wave sequence is one of them, and we've you know, been hovering around as a top there. And this one here is much the same. It's got that 1, 2, 3, 4, 5 here. Do we have the top in? Probably now. And we're in this other little section here. We need to keep a bit of an eye on that. I don't need to look at it at the moment, but we're looking for some sort of ABC back here. I'm thinking that when the stock market comes back to its wave B, after it finishes its 5 waves down for wave B, then this will be ready to go at that point. PLS is one that was in the second group where they were just extending out and would reach 5. So if you're in this, that, you know, that $5 you target. I normally just go to 480 myself. 472 is my thing. I'd be taking most of it off at 472 because that's group 2 before 500, before the $5 rather. So yeah, AKE here, I think this has got a slightly different count on it at the moment, but I still do. I wouldn't trade. I mean, I wouldn't trade long in this because the other ones need to sort of kick back a bit, you know. IGO, so look, just waiting for a top there as well. In that, we figured you can see it's struggling here with the old high and all the rest of it, so we want that to come back. Min was one that was cranking up, so expecting that to come back, so that's okay. We need a correction, you know, we need some sort of ABC correction, then we can move in for the next run, so to speak, you know. And then also too, I found LEL, lithium here. So I like this one. This is like an A wave, a B wave, 1, 2, 3, 4, 5 here for C wave, and then but we'll have to look at this as wave 1 to the upside here as well. I mean, I haven't pulled that apart, but it's probably 1 and 2 in here. 1, 2, 3, 4, 5 for third wave, fourth wave, and fifth wave. So we should look for an ABC to come back here. Be good support here for all across here for that. And then that should push up there. So I kind of like this one. Just not quite ready just yet. And then GL1, what was this one? Okay, that's Global Lithium Resources. It looks like if that's the low, then I need to pull that apart. I need to go in and see that there. I mean, it looks like 1 and 2 here, but I mean, it's going to hit the 3 here anyways. So for that, so we'll just, you know, we'll see some sort of dance across here for that. But anyway, just bring it on the radar. So that's that. And just coming back to the government bonds here, the yields rather. So yeah, I mean, I don't know if I talked about this yesterday. I think I talked it on the other ones. Is that, you know, the interesting thing here from the low here, we're counting 5 waves up, 1, 2, 1, 2, 1, 2, in the blah, yada, yada, yada. So when we get up to 5 here, that will pull back again and then go up again. Now I could look at this 5th wave here as wave A or a larger wave 1. I don't know yet, but the thing is that, when you come back to the monthly chart here, I think we've talked about this before here. I can't remember if I have or not, but yeah, there's the 80s here. That's the high. You can take that right back to 1950, I think, 47. So, I look at this and I think, well, shit, we should be taking out the tops here, But look, it might not be the case, I don't know. But all I can tell you is that we're going to get 5 waves up to 5%, then we're going to get a correction, and then we're going to get another 5. After that much I can say, right? But I don't know where that top target is here. If that was $5, 8 or 10 would be about right, okay? Yeah, so if we get 5 here, we'll have a correction, another 5. That's all I can tell you at this point. But counting this down here kind of opens it up to being much higher. I don't want to, what does that mean in the bigger picture for things? And am I right or wrong? I don't know. All I can do, and all I can say is I can just count the 5 waves up to the 5%, watch the correction and get another 5 up, and once we get to that one, watch what happens here. And if we get a corrective pattern here, well, then we're going to go up again, and we'll have a larger 5 waves up, and that's pretty freaky at that point, having this as whoops, daisy, having this here as 1 and 2 and 3, and then 4 and 5 here. If we get those 5 waves, then if we get 5 waves there to 10%, we're going to have a correction and we're going to get another 5. So that's how it builds to the upside. So all I can tell you at the moment is we're getting 5 waves in this first leg. We may just get to the B wave, an A and a B and a C here, and that's it, and the world is saved and we go here, or something else happens, or we get a larger 5 up. I don't know. But that's what we're up against at that point. Over to the US dollar here. As I mentioned, I'm thinking that we've had 3, 4 and 5 here for 3 and then 4 here, because that's what I'm seeing on the pound, the cable, and seeing it on the cable pretty clearly, really. So I'm thinking that we're going to be going higher, but we could drop a little bit here first before we go higher. I'm not quite sure, but yeah, that's what the sort of picture looks like. I'm getting that off the cable more so. That's my strong point. That you can see that in the Euro video if you want to check on that. So if that's going to go higher, then this is going to go lower, and that would be correct in line with the S&P 500 and the what's the name. So we could also probably put that wave 2 there. If we don't do that, then what will happen here will be this will come down a little bit further, and then we'll pop up, and then we'll go down. So I think in terms of trading short here, you really want that first low below the level to be in here. And then if it's going to, kick back a little bit and then come down, just a classic trading levels pattern at 67 cents. Right, so you want that floor to become the resistance, and you want that checked. You want to see it like this here. You want to see it come through, have a low, go back up and check. Put your order here. If there's a second low, put half a part order there, and then let them trigger in at that point, because otherwise it could go up at that point. That will keep you safe at that point. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.